Welcome back to another episode of Still Searching. Today, my guest is John Rodriguez. He is a managing broker at the Ventura Group, which is a small business brokerage firm based in Austin, Texas. John, how you doing?
I'm doing good. Thanks for having me on.
Thanks for being here, man. I'm excited about this because, especially from having a really good seasoned business broker, we're going to get a lot of solid nuggets for first-time buyers about things they should be looking for, how to position themselves as a qualified buyer. And not just that, you've got a perspective as a business owner yourself, right?
I do. So, like a lot of business brokers, I came into this kind of sideways. Actually, I'll go all the way back. So I grew up in a small business that my dad started. Ended up taking it over once he got into his 70s. Decided to leave that group, and then like a lot of people, I think that go through exiting a small business, they want to buy a business. And when my family decided to move to the Austin area back in 2021, I gave myself 12 months, to find a business and to find some place where I could leverage everything I'd learned running my family's restaurant group and growing that without having to start from scratch.
Wait, so you started running a restaurant?
Yeah.
The one business, like alongside gas stations that we're never supposed to buy?
Yep. That was where I cut my teeth. So my dad immigrated to this country from Mexico in the early 50s and started working in restaurants. It was the only work he could find. Eventually scraped up enough money, opened a bigger one. And that was what I grew up with. It was my dad is, the restaurant owner. And when I got into the group, we had one huge location, and they had started doing some catering and events. We had retail foods, and I came in and I grew it into a group that had two concepts. We had several different revenue lines, and I decided that I didn't really like being in business with family, like I think a lot of people they get in business with family. So I made the decision to leave back in 21, and that's where my family moved from St. Louis, where I grew up, to the Austin area. And if you can, I really do think if you can figure out a way to make a nickel in the restaurant business, that's a very good training ground for just about any business.
Man, you're saying it right too. Because anything that can go wrong will go wrong in the restaurant business. I mean, those costs are ridiculous. So like if you learn how to manage costs in a restaurant, man, you'll kill it anywhere else.
Yeah, it is a thin margin, difficult cash flow game. And our flagship restaurant, the doors opened at 6 a.m. every day for our prep crew and our maintenance crew. And then our night crew would leave at about midnight or 1 a.m. and we were open 362 days a year. So you want to talk about a demanding business to run. It's
from
tough.
the human capital perspective.
Oh, it's unbelievable.
Man.
People ask me all the time, they go, what's the hardest part of the restaurant business? And I go, imagine a business where a good year you make about $2,000 of profit per hire.
Wow.
Yeah.
Man. Yeah. Well, that right there, that's exactly why I never want to own a business. But you said, that's exactly how you cut your teeth and figure out how to do it.
Yeah.
So you said you got to an exit, right?
I did. So I came into the group in about 2010, and there was no real succession plan. My dad had a third-grade education, and all the lawyers and advisors he had, they were just there to keep the IRS away. The idea of like advanced planning and legacy planning, my dad just didn't understand that, didn't think about that. And when it came time for him to retire, and he wanted me to get involved with the group, it was like, yeah, just go ahead, just go in there. They know you're an owner, like just go in there, kind of figure it out. And he'd been sort of semi-retired for about, I don't know, 5 or 6 years at that point. And went in there, figured it out on the ground, I think really the best way to figure out any business. And I was partnered with, my father's his business. Then I had my mother who owned half of it. And then I had my sister who was also working there. And we never really talked about like, how do you take this one business that has this one owner and this founder, and how do you make it compatible with now having like all these multiple stakeholders that all have different expectations or contributing different things. And we never really got on the final
call.
Yeah. It's tough. And we'd never really figured out a good way to professionalize the business, to that point. And we all wanted different things from it. We all had different expectations. And I thought, in the interest of not fighting every Thanksgiving over business, I thought it was just better that I leave and just move on. That was back in 21 when I left the group.
Okay, got it. Now, is your family still operating the restaurant?
They are, yeah.
Okay. All right. So you left the group and you're like, all right, well, I want to get back into business. I learned all this stuff about how to run one. I'm going to give myself 12 months to go find a business to buy,
Yep.
right? So
Yep.
what was your criteria, and lead me through your search and let me know, did you actually buy something?
So I didn't. So I had decided in about 2020 that I knew I was going to be exiting. We didn't know what it was going to look like, but I knew I needed to start thinking about like what was next. So like most people, I thought the idea of buying a business made sense because I'd come into this business that was, 35 years old at the point I got in there. And I thought that was the best way to kind of leverage, what I'd learned and, my experience. So I went on to Amazon and I saw buy then build. And it's funny, I saw buy then build and then I saw the author and I thought that can't be Walker Diamonds. I went to high school with Walker.
Right, because you're from St. Louis.
I'm from St. Louis, yeah. He was a couple years older than me. We were, I think, only in school together for like 1 year, but I knew Walker a little bit. And we had like friends in common. But I started reading that book. I found Search Funder online, and I started spending my spare time just trying to get, acquainted with what that space looked like and what would be kind of a reasonable expectation given, my experience and, the resources I had. And then when my wife and I made the decision to move to Austin, I thought, okay, I'm going to get my broker packet together and I'm going to hit the ground running on August 1st and I'm going to give myself a year. And I did not appreciate how competitive it was out here.
Yeah.
In those 12 months. I really thought, because I tested the waters a little bit in St. Louis, I called a couple brokerages and I talked to some people. And the minute I showed them an SBA pre-qual letter, I mean, they were sending me every listing they could. Yeah. So I kind of expected the same response when I got out here. I had my nice packet with my bio, my investment thesis, my PFS, brokerage statements, my pre-qual letters. And I thought, I'm just going to go shop this around and sit by the phone. And I found out that at that time in Austin, it was really hard to be competitive as an SBA buyer. Yeah. I mean, what debt service coverage ratios look like. It's really hard to get. I was looking at kind of the 400,000 or 500,000 SDE range. Really hard to get a loan to pencil out on businesses like that at more than like 3.5 turns. That's really, it's about as high as you can push it. I mean, there's some
things
you're
already looking kind of on the smaller side of the SBA range anyway. And you're like, hey, if I duck down on the smaller side, I'm not going to have to compete with these bigger like PE groups. But what you find is there's still a lot of qualified cash buyers and people who have commercial loans just readily available. And you're right. You can't compete when your DSCR goes over that amount. And you're just, I can't pay for the loan.
No, I would. I mean, it happened over and over again. I'd see, well, for like every 5 businesses you see, 4 of them are just, they're really unsellable. But the one out of those 5 that looked really good, I would talk to the brokers on them and they just go, look, if you can't come in at 4.5, like you're just not going to be competitive. And that's what kept happening. And I decided to trade because I never planned on doing any kind of proprietary search. Again, I gave myself 12 months and doing proprietary search in 12 months is really hard, but I started doing some of that just to supplement, what I was seeing from the brokers in town. And I found that the hard thing with the proprietary search, at least from what I saw, is if somebody's going through a brokered listing, they're at least like 75 to 80% of the way there in terms of what they expect, their decision to sell, their planning, their preparation, if it's a decent broker. When you're just door knocking, it takes a long time to get those owners from the idea of, selling to actually showing you financials, really getting into the process. And I spent about 6 months doing that. So I had the brokered search going on, and then I was doing some outreach, and let's
touch on that for just a second though, because like you're exactly right about the proprietary part of it. And I think a lot of searchers, they don't fully appreciate how difficult it is, not just to identify businesses that could be in their buy box, but to actually have those conversations. Because if a seller or if an owner of a business has reached out to a broker, they've at least taken the step of indicating their interest in selling.
Yep.
They've done at least the minimum amount of work to kind of like, pull their books together, get a little bit of information and like put themselves out there. But when you identify someone who hasn't done that, then not only are they not prepared to sell, but you have to walk them through the process. Are you interested? This is what it could look like. This is how will you show me your books? I'll sign an NDA. That is a real thing. Like you have to really warm them up to it all the time, wondering like, if you actually get to LOI, are they going to walk away from the deal and leave you with dead deal costs? I mean, it's a whole different level. So like, yes, it is possible to find good deals proprietary. A lot of the best ones are, but it is a struggle. It is a struggle because you have to warm up the owner. Like, you have to actually build that relationship. And you got to hope that not only they're committed to the idea of selling, but committed to selling at a reasonable multiple, not like, 10 times.
Yeah. And committed to selling to you. Because that's something else. I saw this on 2 different proprietary deals I had where I took them from 0 to, about 75 or 80% of the way there, where, we were going through their books and we're talking about, what a deal could look like. And, I lost 2 of them because they went out and found another buyer found them. And it's like, I invested all this work in educating them and helping them get prepared for the process. And then somebody came in and, could offer a little bit more money or something. And
now, like at the time, that must have really stung as a searcher. But now as a broker, you're like, I'm so happy for those owners that they actually got themselves a competitive listing.
So the last one I found out about, this was an owner, and she had told me she was not going to let me see any financials until she had dinner with my wife and I. She was that kind of owner, which I understood, and I appreciated that. But this one came along very slowly, and we were getting ready to go to California for the Super Bowl. We were meeting some friends out there out in Rancho Mirage area. So the last meeting I had before we went to the airport was with this owner, and I said, "Here's what the deal looks like." I didn't do an LOI because I said, "Look, I want to talk you through this, and I want you to be able to talk about it, with your husband and with your other stakeholders." So I walked them through this whole thing, and I said, "As soon as I get back, I want to give you some time with this. We'll go through what an LOI looks like and some of the other things that we need to include." And she literally emailed me when we were at the airport coming home, saying she'd signed paperwork with another buyer. And I said, man, "Please, I'm going to be in Austin in like an hour and a half. I'll go straight to your place." And, she'd found someone else. And I don't even think that one was really about money. I don't know why she liked this other buyer so much more. I mean, I don't know. But I left town for 2 days, and then, there went about 4 months of work.
Wow. Okay. So, man, you really struggled. For those 12 months, going through the brokers, doing some proprietary outreach. You have a couple near misses, but ultimately you don't buy anything. So what happened? You get that 12-month and you decide, I can't keep searching?
Well, I was new to Austin. I didn't have any network out here at all. So when I first got to Texas, I started going to a lot of networking events, and I was talking to a lot of advisors, "Hey, I'm looking to buy a business, if you have any clients." So I started getting a lot of people reaching out to me going, "Hey, I know this owner, I have this friend, maybe you should talk to him." Because what I would tell everybody is I would go, "Look, if you know anybody that owns a business that's even thinking about this, I would love to talk to them. Even if it doesn't make sense for me, they'll just benefit from having my perspective." And, I ended up meeting with a lot of different owners, and I kept seeing the same things just over and over again, that, the businesses just weren't prepared. The owners didn't really understand how the marketplace worked. They had no idea, what they should be doing for like advanced planning and sort of estate planning and tax planning. They were a lot like, the way we ran our business. And after meeting with all these owners, I thought, I think I'm going to start doing some consulting work. And, because I would meet with somebody and I would tell them, some of the things from my perspective as a buyer and as an owner. And they would say, I would love to keep meeting with you and I'd love to work with you. And, I would come up with some kind of, well, I'll charge you this for an hour of this. And then I thought, I should come up with something, because if I can't buy a business, this is what I want to do. I think there's a ton of opportunity for it. I think it leverages what I'm really good at very well. So that's how I started about 6 months into my search. I started thinking, well, if I can't get something over the finish line, what am I going to start something? Am I going to work somewhere? And that's when I fell in love with the idea of like doing this kind of consulting work and just, working with owners. And that's when I decided to get my SEPA designation. And that's when I started working on exit planning and advanced planning. And that's ultimately what led to brokerage.
I would imagine that those conversations with you and those other owners went across so much better than your typical M&A advisor, because you had been an owner, you've grown up in a business. And so if these like owners are showing up and they're, like you said, they're unprepared, they don't understand the process, they don't understand the marketplace, you can completely relate to where they're at. They're like, by the way, I'm pretty sure this is what your business looks like. And they're like, yeah, that's exactly it.
Yeah, I would go, look, it's just me and you here. Like, you're attorney. Yeah. Like, believe me, there's nothing you're going to show me that I haven't seen. I mean, it gives me a completely different perspective. And I think, one of the first conversations I have with any owner, whether I was doing exit planning or like sort of growth consulting or advanced planning or whatever, is I would just ask him, what do you want? And they would go, well, what do you mean? And I go, well, you started this thing, you spent half your life here. Like, what do you want it to do, for your life outside of business? And I found out most owners have never been asked that, and they've never really thought about it. They decide to start a business for whatever reason, freedom, to build wealth, legacy, whatever it is. Necessity for a lot of them. Yeah. For my dad, it was necessity. And, you take it from zero to a point where, it's making good money and it's sort of, stable as owning a business can be.
Right.
But it's almost like it's taboo to sort of think beyond that, and I found that there's not nearly enough owners and not nearly enough of their advisors that I think are talking to them about that like, hey, you might be happy now and you might be really content now, but this is going to end somehow. And, you can either control that or it can happen to you. And I've seen that the owners that do get really good results long term are the ones that are really proactive, and they're not just in there operating a business as their livelihood today. They're really designing a business that's going to be able to fulfill all the things they want long term.
Yeah, you're exactly right. And it's like, we all know that, at some point you will exit your business, on your feet or on your back somehow. And so, but you're right. I mean, so few people, and it's not just business owners, it's just people in general. We don't really decide like, what does winning look like to us? When you're 60, 70, 80 years old and you look back and like, hey, I designed the life I wanted. I'm successful. And then you work backwards from that. And so that is the pivotal first question. Like if you're ready to sell your business, forget the business as an asset. They're just like, if you're ready to sell your car or your house, or what does post of that look like? What does your life look like afterwards? And what do you need to do to make that a reality? And then work backwards from that. And you're right. I've talked to owners who, they knew that they this one guy had a vacation home in Honduras, and he's like, the moment this thing sells, I'm out. I'm gone. And there's nothing wrong with that. And then another guy, which is more common, but another guy was like, he's like, I grew up in this business. It's my family business. It's been here for decades. And everyone we know is in this town. I've lived in this town my whole life. He's almost 80 years old, and I'm not going to leave. So they're like, I'd like to be involved. I love what we do, but I recognize that I can't run this thing anymore.
Yeah.
And if I die, then no one's going to be here to run it. And so I'm just trying to have a practical discussion about that before I hit the death, disease, divorce, issues.
Yeah. Yeah. I think one of the things that I'm seeing a lot more of that I think is actually really positive is when you think about, your typical W-2s or typical employees, for them, retirement is this sort of cliff. It's like, I'm going to work, and then there's going to be this day and I'm not going to work anymore. And I don't find that kind of retirement works very well for business owners. The idea of I'm just going to go, and then I have this date circled when I'm 65 and I'm never going to work again, and I'm just going to fish 11 hours a day. I don't see very good outcomes from that. So I think the idea, like you said, of this sort of happening in phases, I mean, it's just kind of human nature. Can you really go from working 70 hours a week every single week for 30 years to having all that free time available to you? Most owners kind of don't know what to do with themselves. They get bored very quickly. So I like the idea of like kind of treating this in phases. Like, let's pull back a little bit. Let's pull back the responsibilities a little bit. And that ends up building businesses that are much more sustainable and much more sellable anyway.
Yeah, it's ironic how, what's good for you is also good for the business. Pulling
Yes.
yourself back and
Yes.
allowing yourself to gradually transition out allows
Yeah.
the business to gradually take over for you. And so you end up
Yes.
building a better asset.
Yeah,
So,
it's supposed to be the idea, but I think this happened to me when I owned my businesses. I think it's kind of an ego thing. It's hard. There is something comforting about going like, I'm the only guy that can do this. I'm the only person that can make this. This place wouldn't exist for 2 weeks without me. I think it's a little bit of, an ego thing. And I think that it's also it's really hard, I think, for a lot of owners to delegate. I know it was for me, and it's something I see with a lot of the owners I work with. Is it's really hard for them to trust other people enough to delegate like real responsibilities to them, because they probably had the whole business on their shoulders since day one.
well,
And
you're
it's
exactly right. They've walked through the valley of the shadow of death for
yeah,
years, right? Where they
yeah,
had to do everything and it was going to die. And it would have died if they
yeah,
hadn't pulled it through themselves.
yes,
And so, we may have gotten to a point to where the business can survive largely without them, but in their
yeah,
mind, they're still the ones holding it up, with their shoulders.
yeah,
So that makes a lot of sense.
yeah,
Let's pivot a little bit now.
yeah,
So now you're working with the Ventura Group. Your
yep,
consulting kind of launched into a full-fledged like broker consulting type
mhm,
of organization here, and now you're dealing with first-time buyers yourself.
yeah.
Would you say like what percentage of business buyers are first-time buyers as opposed to like people who are looking to expand or enterprise buyers?
I would say it depends on where you look. If it's biz buy sell, it's 98%.
Yeah,
If it's any of those sort of public marketplaces, if I go put a business up on biz buy sell right now that's gonna, check the box for most searchers, I would say it's 19 out of 20 calls you get are going to be first time
yeah,
buyers. Now, if you're sort of sourcing buyers more through like networking and more through other advisors and things like that, then it's going to be, I would say it's a little closer to 50-50 in my
mm,
experience. But just generally sort of out in the world, people who are looking for businesses, I would say I wouldn't be surprised if it's 90% first time buyers.
yeah. That makes a lot of sense too, especially with the explosion that we've seen the last few years just within the small business,
Oh,
quote, buy a business space.
yeah,
It's been
yeah,
wild. And, obviously we get a lot of, there's a lot of people who are unqualified, who are
yeah,
just kind of excited about the idea of buying a business.
yeah.
But now you're getting contacted all the time by first time buyers who are interested. What types of advice would you give buyers to be competitive? Because you're talking about how like, when you went to Austin, I mean, you're a qualified buyer. You have experience running a business.
Mhm,
You were pre-qualified for SBA. You had,
mhm,
the right capital, but you couldn't make the numbers work. And
yeah,
now it's a very competitive landscape, especially in Texas.
yeah.
So, what kind of tips do you have for a first-time buyer to help them distinguish themselves a little bit?
So what I would tell most first-time buyers, and I've worked with people on the buy side that have actually done this successfully, is you're gonna have to bring more to the table than money. As a first-time buyer, the odds that you are going to be the highest economic outcome for a seller are probably pretty low. But the good news is that a lot of sellers aren't just interested in money. They have their kind of threshold where it's like, look, if I want to make retirement work, I have to sell for this. The thing I found with most sellers that I think would surprise a lot of first time buyers is, let's say you have a seller and their out the door number's 2 million. Got to get 2 million. That's the only way they can, make everything in retirement or whatever they want after their business work. I've found that most owners, if they get a PE group that they don't trust that offers them 3 million, but they find a searcher they really like at 2.2, they'll go with 2.2 a lot of the time.
Yeah,
Now, again, if somebody comes and offers them 10 million, maybe a different story. But what I
but
tell
that speaks
buyers
to
all the
building the relationship.
that's the thing. Most I think one of the things that particularly first time buyers that have never owned a business, I
Mhm.
think they don't understand the emotional connection that most of those owners, because they're mostly founders, I don't think they really appreciate the emotional connection they have to that business, the connection they have to the stakeholders, and if they plan on staying in the community, the way they want to protect their own reputation. And no, there's very few. I think there's a lot less sellers out there that would take an extra 5 to 10%, knowing that their employees were going to get fired, knowing that their IP was probably going to disappear, knowing that their legacy was going to be tarnished. I mean, most of the owners don't want to make that trade. So the thing that I tell buyers is really lean into creating a relationship with that owner, because if that owner has an offer of 2.5 million and you can get to 2.2 and you can get creative with payback schedules and things like that, if they like you a lot more and if they believe you're going to be a lot better for the future of their business and their reputation, they're at least going to be interested in hearing you out. And I've actually seen several buyers I've worked with have done that really successfully, where they've just leaned into creating really what looks more like a partnership than just a transaction.
Man, that is so true. That is so true. I tell people, I'm like, look, the finances are really they're not even close to the most important thing when looking to buy a business.
No,
I tell people, like, the finances are like, those are table stakes.
Yeah.
Like, they have to be there in order to have a discussion. And if they're not there, you can't have the discussion. But if they're there, then at that point going forward, it's all EQ. It's building the relationship with the seller. It's understanding, are you a good fit for this particular business? Are you a good fit for this particular seller? Because a lot of times, the sellers are involved in some capacity post-transaction. And so, wow, really good advice, making sure that you're taking time to actually get to know the person. I met an owner, when I was searching, I must have met somewhere between 250 and 300 owners. And one of the phone calls with this guy who was running a landscaping company in the Bay Area. And we got on the call and just kind of hit it off. And he was a nice guy. He has his wife there. And towards the end of the first call, I'm like, hey, really enjoyed the conversation. Thank you for telling me more about your business. And he was like, and they were both like, yeah, we really enjoyed the conversation too. And then the owner, just unsolicited, was like, yeah, we talked to a buyer just a week ago, and it was the worst conversation I've ever had. He started off, first time we talked, interrogating our numbers, talking about how we had too many employees, and it was just the most off-putting conversation I've ever had. I'm so glad we got to talk to you. And I never submitted an LOI in this company. It wasn't the right fit for me. But I was shocked then, and I remain surprised at how many buyers just lack the empathy, on date number one. Get to know them first before you start scrutinizing everything about their business. It's amazing.
I tell the people that I've advised before on the buy side, don't make that first conversation about anything technical. Really make that first conversation about, forming a relationship, and, tell them what a great job they've done with their business. Here's what I really, really like about it. Here's what I admire about what you've done with it. A little flattery goes a long way. You're going to have 200 more conversations with this person, and they're going to be selling their most valuable asset and, business that they've probably spent more time with than their kids. Don't go right into the P&L and multiples like that. That's really the wrong approach. Really focus on making this look like a relationship, making it look like a partnership, because you guys are really partnering together on this transition. It's not like buying a piece of commercial real estate. And I think the other thing I would say is really focus on what makes you unique as a buyer. That's the other thing. Is it your operational experience? Is it your specific industry experience? Do you have a background that's in HR, or are you going to be able to leverage something from your background in that business that's going to be really uniquely valuable? Those would be the three pieces of advice I would give.
I think that one's great. I really do. I remember I talk to a lot of searchers now, and they always tell me, they're like, hey, I read the HBR guide, and it tells me all the things I should be looking for in that beautiful, perfect business, right? Recurring revenue, low CapEx, all this stuff, the 12 check boxes, and that doesn't exist. And so then they're like, oh, what do I look for? And I always talk to them like, well, what's the one thing that you're uniquely qualified to solve? Is your background, like you said, is it in HR? Is it in operations? Is it in finance? do you have like, are you used to leading people? Like, you have a veteran? Like, what is it
Yeah.
that you bring to the table that's unique,
Yeah.
and then find the business that could most benefit from that value add. Find
Yes.
that one.
Yeah. That's very good advice, because you're right. That mythical business that hits all 12 check boxes, I've never seen it. I've seen 1,000 of them. I've maybe seen a business that gets like 8 of them, maybe.
Yeah.
Well,
Well,
it's
that's
just,
because
it's not out there.
once you hit 9 or 10, then they get snapped up before you'll ever see them. Like, they're
That's the
diamond in
thing.
the rough.
Yeah. Well, and I think that leads into a really good point, which is, if you understand that you're not going to find the perfect business, because the perfect business doesn't exist, and it really doesn't exist, in the sub $10 million space. If you know you're not going to find the perfect business, to me, that's an even better reason to find the perfect seller for you. I will bet on a really good buyer with a really good relationship with a seller that both want to see each other win. I will bet on that with a mediocre business over a good business where those two are adversaries every day.
100%.
Yeah.
100%. I tell everybody, I'm like a business is the direct reflection of its owner, like,
Yep.
bar none.
Yep.
You imprint yourself on that business with your hiring, with your systems or lack thereof. Like, all that stuff is a reflection of you as the seller. And if you don't have a good relationship with the seller, like at least a good business relationship, you are doomed from the beginning.
Yep.
Because
No
you are
chance.
not going to be able to right that ship. There's just no chance. And so that is always step number one. But yeah, you're exactly right, because it is even if it's a short partnership, it's always there's always a transition period. There's a partnership there. And I have seen mediocre businesses with, when the buyer and the seller are on the same page, man, they can really take off.
Yes. Yeah. And even under kind of best case scenario, let's say it's a, brokered listing and you have that first call. Let's say you can close it in 60 days. I mean, that's hard to do, but let's say you can close it in 60 days. Let's say they're only sticking around for 2 weeks. That's going to feel like an eternity. I mean, that's still a long period of time where you're going to be talking to this person and their representatives on almost a daily basis. So even if we compress the thing about as much as we can, again, for a first-time buyer that's an operator, I'm not talking about a strategic acquisition, but for that first-time acquisition, even under the best of circumstances, you're going to be spending a lot of time with this person, and you're both going to have to trust each other. There's no cheating that trust. I don't care what legal agreements you have. There is no way around that. Both parties have to trust each other for this to work.
I'm so glad you said that too, because one of the other red flags I run into is people, they're like, well, I don't have to worry so much about trusting the seller because I've got this purchase agreement. I've got representations and warranties that are in my favor. Like, I've got the non-compete clause. I've got all, the seller's note, the earn out. I've got all these things that are written into place to help protect me as the buyer. And I just remind them, like, look, I mean, do you know anything about behavioral finance? People do things that are outside of their economic, interests all the time, the time. And, your only recourse if the trust is broken and someone doesn't hold up their end of the bargain when it comes to the purchase agreement, your only recourse is litigation. And litigation is expensive and it's long. And in the meantime, you're still having to keep that business afloat. And if you and the seller are, you're in court against each other, the business is failing. I guarantee you the business is failing.
Yeah. And even in the best case scenario, if you do have, absolutely ironclad agreements and you get into that business and it, turns out that there was fraud on the part of the seller, your best case scenario is you're maybe going to recover half of it in about 2 to 3 years after you've been fighting and paying and arguing. I mean, that's really the best case scenario, in terms of recovering something in the incident of fraud. I think it's way easier to just go find another business with someone you trust. I think that's a much better strategy.
100%. Absolutely. So moving forward into like the types of industries. So like by definition, a first-time buyer has most likely never owned a business before, right? Yeah. They're coming from a W-2. And that means that they have no experience in the industry they're buying in, whether that's landscaping or HVAC or plumbing or you name it. They have no experience. And so one thing that first-time buyers are really interested in is they want to find something that helps mitigate their risk. Because a lot of the ones who are a little bit, they understand that as a first-time buyer, there's a lot of things they don't know. And the biggest mistake they can make is buying a business that fails, right?
Yeah.
And so they want to mitigate that problem as much as possible. And so I get the question all the time. It's like, what industry is the safest? What's the best, recession-proof business industry? Or does it matter if I don't have experience in this industry? What's your advice to a first-time buyer if they're looking at an industry that they don't have experience in, or if they want to try and find one that's, quote, safer?
I'm not a big fan of the safe industries. I think that there's way too much stock put into that. I will take a good business and a good owner in a tough industry any day over a mediocre business that's in a high value industry. At least, again, in the small business world. I know some first time acquirers that have been pretty successful just going and looking in industries where no one else is looking. I know people that have bought like music studios. I know people that have bought small restaurants. And the reason is because even though those industries are really difficult, there are businesses that do well in those industries. And because they're not as competitive and because searchers generally don't like them, you can be a lot more competitive as a buyer. And I know a few people that have specifically said, look, I know where all the ETA guys, I know where all the searchers are going. I'm just going to go somewhere else where I'm going to be able to stand out a lot more as a buyer, and I'm going to be able to get a much more competitive deal. Going and getting like a neighborhood coffee shop that you can get at 2 turns. I think most people that have gone down this road can probably figure out how to run a little coffee shop. You want to go pay like 6 turns for a SaaS company and compete with all those people. That's a lot harder in my opinion. So I think there's way too much made of sort of good and bad industries. That being said, if I'm a first-time buyer, I would generally like to see buyers going in places where there aren't going to be a lot of employees that are a sort of single point of failure. I think that can be really, really dangerous. If I'm advising a buyer, I'm talking to a buyer that's, going to go buy their first business. I'm going to go think about the worst case scenario and make sure it's something you can solve for.
Right.
If this person doesn't show up, if we lose this customer, I'm not saying it's going to be comfortable, it's going to be easy. Is it something you can solve for? Can you go in and fix that problem and keep this business going?
That's one of the issues you see with licensed industries. Like if you're going to show up in like, construction or landscaping or plumbing or something that requires a license. And let's say like I'm a, general manager at, Qualcomm, I don't have that license.
Yeah.
And so, most of home service businesses require a license of some kind. Yeah. So, what kind of strategies have you seen be successful? Do I need to go out there and get that license? Does this really fall back on the relationship with the seller so they can teach me? Like what kind of things should I be thinking about, especially if it requires a license and I have no experience? Because I don't want to be in a situation where I buy a construction company and I don't have a construction license, but my number one employee does. And now they basically have me, but they have me, I can't do anything because I can't fire them.
Yeah, I think if you can get the license, that's always better. It's just going to give you more redundancy, and it's going to prevent that one license holder in the business from having so much leverage over you, because that's something that I think is really dangerous. But there are times I have seen licensed businesses that require licenses where the owners haven't held the license, but they've just been very careful in managing that relationship with the license holder and having really good plans around, what happens if that person gets hit by a bus on the way, or, I think you can mitigate some of that with planning, but I think in general, getting those licenses it's just going to give you more options. And I think it's probably a good idea. The times I have seen people that haven't had licenses, they've had a really high level of trust with the person that does, and they've had that person really incentivized to see the business succeed.
Yeah, that's super important. And again, speaks to relationships because I mean, a lot of times you run into these situations where if you've got an employee who's a license holder and they've probably been in the industry for a long time, they've got a lot of knowledge and expertise, but they've never been an owner.
Yeah.
And so getting to the point where you've built up the kind of trust where they're in with you as a partner, or you've incentivized them with equity, half the battle isn't like giving them the equity. It's helping them understand, have the mindset change. Like, oh, I'm an owner now. Like this matters, because you run into the same issue with these industries where, the labor force is in high demand. And so if you're that kind of person, you have that kind of license, you've been working for a long time, that's why the relationship is so important, because that person could just as easily quit and join your competitor tomorrow.
Yep.
And do very well for themselves.
Yeah. And then you're going to have to go out and hire a license holder immediately, and you're going to have to give them whatever they want.
Yeah, exactly. Whatever they want.
Whatever they want.
Yeah.
That's a tough spot to be in.
Yeah. So that kind of leads into my next question, which is, you recommend either get the license yourself or, build a really good relationship with whoever your license holder is. But at the same time, if we're talking SBA level businesses, you have to, as the buyer, you have to be ready to walk in and roll up your sleeves and get into work. And I'm not saying that you're going to, if you buy a plumbing company, you're going to be doing the plumbing yourselves, but you should understand how that works and get out in the field, because you can't just sit in the office and run the business, right?
Yeah, that's I'm sure you see this all the time, but that's one of the big myths that's floating around out there is you go buy a business for $1 million, then you hire an operator for $52K a year.
Right.
It's total fantasy. I mean, I'm trying to think, because I've spent my whole career in the kind of like $1 to $5 million range, and I've maybe seen, out of the hundreds and hundreds of businesses I've maybe seen 3 that were really like that, where that owner was really just going through financials once a month, weighing in on strategy periodically. They didn't have to have their phone turned on. That's very rare in this space. It just doesn't happen. And
every listener everywhere is like, so you're telling me there's a chance?
Yeah. I'll put it this way. You're a first-time buyer. I like your odds of winning the lottery without buying a ticket better than you finding one of those businesses. It's just, they're not out there. Generally, like what I see, the kind of the meaty part of the curve, for the kinds of businesses we're talking about, the more, kind of B2C service oriented businesses, if they're under 5 million, I don't even know that they have managers in there the way that like we think of managers. Now they'll have a manager on payroll, and if you ask those owners, they'll say, "Oh, I have a great manager." But you start peeling back the layers on that onion a little bit, and you find out they're really supervisors. The owner is the one in there every day that has. The owner's the only one with P&L accountability or financial accountability. They're the only one that's doing anything strategic or any kind of planning in the business. And, those managers are really there in more of a supervisory capacity. Doesn't mean they're not good at their job. Doesn't mean they're not valuable, but they're not hands-off executive management.
I always see that as, like you mentioned it, but that is my test question. Does the manager have P&L authority? And if they don't even know what you're talking about, they're not a manager. They're a foreman, they're a supervisor, and there's nothing wrong with that. You need those people, lots of them. But, just because you've been leading the team for 30 years doesn't mean you know anything about the profit and loss statement. And if you don't, then you're not managing the business whatsoever.
No, if there's no P&L accountability, I don't think manager or director or chief should be in the title. That's my opinion.
Absolutely. Yeah, absolutely. Okay, so lots of really good nuggets for buyers here. So we've talked about the industry a little bit, and you mentioned that most of your operations have been in that $1 to $1.5 million space. A lot of buyers ask me, they're like, there's this back and forth. Should I buy small or buy bigger? And in this case, if we're talking SBA, bigger is like that $5 million level. And in the grand scheme of business, that's still incredibly small. So what's your opinion as far as, if I'm a buyer, do I want to kind of target the smaller $1 to $2 million revenue businesses because, maybe I don't know as much, maybe I want to learn, maybe that feels, quote, safer? Or should I be, even as a first-time buyer, should we target those $4 to $5 million businesses because they're bigger, they probably have a little bit more stability, maybe a little bit more runway for me to learn without breaking something? What's your opinion?
I think smaller is better. I think that, there are the businesses, as they get bigger, they do get more sustainable and they do theoretically get easier to run. That's why they're a lot more competitive on the buy side. And in my opinion, if you're a first-time buyer, it's not really about, what is the perfect business for me? It's what business can you win on? And, this was one of the problems I had with my search is, I was the worst buyer at the table on every business I saw. If I was just being honest with myself, we're going to have an SBA appraisal. It's probably going to take 90 days. I have people that are writing, checks for 80% that day. It's like I can't compete with that as a buyer.
Yeah.
So I think, if you go down market, really in like the sub million in earnings, but particularly sub like 500,000, yeah, they're harder to put debt on. You're going to have to grow it a little bit more quickly. But I think there's a lot more of those businesses, and there's a lot less people looking, and there's a lot less competition on the buy side. That's if I had to go back and do my search over again, I was really looking kind of 500,000 SDE. I turned my nose up at a couple businesses that were in that 250 to 300 range. I wish I would have been a little bit more open to those, because I think I could have won out as a buyer. And I think that I probably could have turned one of those businesses into the ones I was chasing. I don't want to say easily, but I think I could have managed it in a year or two.
Sure. Well, probably the number one criticism I can hear from a first-time buyer is, well, John, I'm not buying a business, I'm buying a job. What do you say to that?
I would say you're buying both. Again, we talked about this idea of passive ownership. Go buy securities. If you want passive ownership, go buy Tesla stock or something. I don't think it really exists in this portion of the marketplace, particularly if you're a first-time buyer. When I think about like really passive businesses, where you're the single acquirer and you're really functioning as an investor, you really got to get north of like 10 million. I think. I mean, that's what I've seen. It's very rare that I see, the $2, $3, $4 million businesses where the owner doesn't have a job. There's going to be some responsibility attached there. Now, it might be 15 or 20 hours a week. I mean, I've seen that. But the idea that you're going to go buy a $3 million business and then go kick your heels up on the beach, I don't see that. I just don't think it's practical.
Yeah, no, you're exactly right. It's one of the biggest myths out there, and we've kind of alluded to this already, but the myths over and over and over is passive income. I can just hire a general manager and I don't have to be a part of it, and I can maybe put in 5-10 hours a week, maybe at the most. Just managing the manager, right?
Yeah, sure.
Without really thinking about what happens if my manager gets sick or has an issue with their kids or decides to quit. What happens? Am I going to step in now? So that's myth number one.
Yeah, just to pick apart that, because I love this one. I hear it all the time. Think about the kind of candidates you're going to get for $55,000 a year. I mean, if you're going to spend $55,000 a year out of your cash flow, that's really a salary that's about $40,000 a year. That's what dishwashers make. Yeah. You're going to entrust them with this asset. They're going to have the experience and the incentive to take really good care of this thing. Like, I mean, the owners I say, you better budget 150 on that line. I mean, that's really, if you want to pay somebody who's qualified, that's going to take really good care of this thing, that's going to be able to take over your responsibilities, the salary is going to start at about 110 to 115. Then it's going to be burdened. Then you're going to have bonuses. You're going to have phantom. You're going to have to do a lot more than a $55,000 line item. That's not even in the book.
Yeah, you're exactly right. And the key term you dropped there was like, take over this asset, because the thing you're missing is that it's not just hiring someone to do the job, but as the owner, you're still responsible for the debt because you bought the company. Yeah. Whoever you hired is not responsible for the debt. No. So, ultimately, no matter what they do, you're the one who has to make sure the bank gets paid every month. And so it's all on you. They have no risk. You have all the risk. And so who are you going to trust to manage the asset that you are 100% responsible for? Yep. That's a great question.
Yeah. Yeah. And again, I even think now it might be getting closer to like 175 or so. I mean, to find that one person.
It's industry specific. Absolutely.
Industry specific, but I see that number growing more and more, or I see a lot of people mixing in, profit-based incentives and things like that. But, I think the moral of the story is like your business is going to have real cash flow if you want to start downsourcing a lot of the ownership responsibilities. Yeah. And until then, they're all going to be on you.
So great point. So there's no passive business. Don't try to hire a cheap manager. What about like, we hear this a lot, no money down. Like, can I buy a business if I'm broke? And not just broke, like what if I have limited financial assets? Should I be looking for those 100% seller note type businesses or is that something I should even entertain?
No, It's pure fantasy. It's all nonsense. I don't mind saying it.
But John,
There
you're just
is,
saying that because you're a broker.
yeah, yeah. There's two scenarios where you can go buy a business with no money down. One is where you share DNA with the owner, and the other one is when that business is 2 minutes away from liquidation anyway. That's really
Right.
it. I'm not saying it's impossible. You might find an owner and just have such a good relationship with them, and they might hate money so much that you can talk them into it. Um, I wouldn't bet on it. I don't think it's a good strategy. The way I explain this to people is really simple. Would you sell your car to a stranger for no money down? And they go, well, no, how would I ever get paid? And I go, so you're going to do that with your business? I mean, it just doesn't make any sense. You would never sell anything valuable to a stranger that has no risk in the equation. It's just,
Yeah.
again, I know that's another one of those myths that's floating around all over the place. Now, I think there is a lot that can be done in actual creative financing, and I think it's important. And I was just on a call earlier where I was telling somebody that, I really do want to see the sellers finance something. I think that's important. I think it gives them buy-in. I think it makes the lenders a lot more comfortable. I think it should make the buyer a lot more comfortable. So I am a big fan of seller financing. I just don't see 100% of it. I would never recommend. I wouldn't even recommend an owner do that with their kids. You should not have an asset that's that valuable that changes hands without any value going in the other direction.
Yeah, I could not agree more. And because, like you said, you have to show like the commitment. You have to show the
Yes.
commitment that I'm taking
Yeah.
over this financial asset in a real, tangible way.
Yep.
Am I putting money down?
Yeah.
And not just like, oh, I put $1 down to make this contract legal. Am I
Yeah.
putting actual cash down? Am I a legitimate buyer?
Yeah.
And with things like the SBA program now, everyone is a legitimate buyer. So
Yeah.
there's no real excuse for you. And
No.
so, but I like what you said there about creative finance, though, because one of the things I like the most about the small business space is it is the Wild West of capitalism.
It
You
really
can
is.
structure any deal,
Yep.
and you can, as long as you can write it down in a contract on the purchase
Mhm.
agreement, and both people agree to it, the world is your oyster.
It is.
I mean,
It
I've
is.
signed deals where we put in seller financing, large portions of it,
Yeah.
amortized it over 25 years with a 5-year balloon. Like
Yeah.
you can do all kinds
Yeah.
of interesting things,
Yeah.
that meet everybody's expectations. But you have to be very clear. Like there has to be a cash transaction at the
There's
purchase
got to be
agreement.
something, and again, I know there's exceptions for, strategic acquisitions and like roll-ups, and there's always the outliers. The way I always talk about the no money down stuff is just do not use this as your strategy.
Yeah.
I'm not saying it can't work. I understand how independent sponsors work. That's not what I'm talking about. I'm saying you're a first-time buyer that has no money. You're going to have to really measure your expectations about the reality of the opportunities you're going to get.
But even that's not no money. Independent sponsors are just bringing somebody else's money to the table.
Yeah.
That's it.
Yeah.
Yeah.
And
so you're exactly right. I think those 100% finance deals or like 80% plus finance deals,
yeah.
Do they exist? Sure.
Mm-hmm.
Yeah, I could probably go on like Will Smith's Acquiring Minds and find one or two episodes about someone who bought like a $5 million seller finance business, a good one, right?
Yeah.
But they're incredibly rare.
Yeah.
99% of the time, it's you are a family member of the person who owns the business, which can make a lot of sense, when it comes to like estate planning, sure.
Yeah. Yeah.
Or it's the business is distressed.
Yeah.
And if you're a first-time buyer, buying a distressed business is one of the riskiest things you could possibly do.
Oh, I think it's a horrible idea. I think even for the only time I like anybody in this sort of portion of the market buying a distressed business is if you're a direct competitor and you understand that industry and the market so well that you're looking at something that you can be pretty confident you can turn around with sort of limited resources and uncertainty. Outside of that, I just generally don't like it. It's really hard to get a small business turned around once it's going in the wrong direction.
Yeah, could not agree more. Wow. All right, so no passive business, no money down is a joke.
I'd like to say one more thing since we're talking about myths, because I think this ties in really well to the sort of EQ. When you talk about first-time buyers, I hate the term boring business. I can't stand it.
Yeah.
I think it's insulting. I've heard of people actually using it in front of sellers. And I think it goes a really long way towards I think painting a buyer as somebody that doesn't take the investment the seller's made very seriously. That is a term that I would really like to see go away. And I will tell anybody that's a first time buyer, you got to strike that from your vocabulary.
Absolutely. And I understand why it's there. I
Yeah.
understand if you're talking to, corporate, especially corporate Fortune 500 W-2 employees,
Mhm.
and they're used to working in like, CRMs and all kinds of interesting things.
Yeah.
And like, hey, let's do something, quote, boring,
Yeah.
plumbing, HVAC, boring.
Yeah.
Like I get why that tracks so well, but I could
Yeah.
not agree with you more. There is
Yeah.
nothing boring about
Nope.
running a 100-person operation in a $7 million landscaping business. There is
Yeah.
nothing boring about that.
Nothing. Nothing.
That
If
is
you,
intense.
Yeah, I think it goes back to a little bit about what we said about that idea of sort of passive versus active. I mean, I've never seen. I'm trying to think. I don't know that I've ever seen any business in the sub $5 million market where I would say it was truly boring for the ownership. I mean, I'm sure they're out there, but it's like even if you only have a handful of employees and a handful of contractors, you still have competition, you still got to make sales, you still got to run a business, you still got to deal with people. There's nothing boring about it. I would encourage every buyer to assume that it's going to be a lot of hard work no matter what they acquire and where it is.
Yeah, absolutely. I, I love that. I really do. Especially that's one of the terms that's really rubbed me the wrong way for a long
Yeah,
time.
yeah,
But I get it.
yeah,
It's a PR thing, and
yeah,
ultimately, I am appreciative, and I'm very excited about the idea of more and more people getting interested into the space, interested in the idea of
absolutely.
owning a small business. Because if
Yeah,
there's one thing we could really use right now, it's a lot more small business owners. So
I
if it
agree, and
gets you
I think
interested, that's great. But
yeah,
understand the EQ portion. Like again, like if I've run a plumbing business for 35 years, uh, it's not just that I built this thing from nothing. It's not just I had sleepless nights and
yeah,
almost missed payroll and had to fire people and went
hmm
through the financial crisis of '08 and went through the recessions. It's not just that, and went through COVID no less. It's not
hmm
just I got through all that stuff, but my business paid my mortgage. It put my kids through
yeah,
college. It's funding my retirement. It's like you said. It's a incredibly emotional connection there,
yeah.
and so the boring is the last thing I would call it.
No, no, and that's it gets back to what we mentioned earlier that for the buyers that are coming into this for the first time or coming into this space, I don't think you can overestimate that kind of connection they have to the business. And it's not just the logo, it's not just the customers or the employees, it's not these sort of individual facets of the business. It's really it's a piece of the owner's identity. I mean, it's
Yeah,
probably I always say, it's probably the first way they've introduced themselves for 30 years. I'm Joe so and so of Joe so and so, or oh, what do you do? I do that. It's a very big part of their identity as a person,
yeah,
and I think the more buyers can be sensitive to that, and I think the more they can understand the transaction and that sort of context, I think the more successful they're going to be.
yeah. Could not agree more. All right, so we're starting to wrap up. Any final words of wisdom for first-time buyers out there who are looking to stand out?
Um, so I will say this. There's a lot of very bad business brokers out there. I don't often defend my profession because it's a completely unregulated space. There's frankly a lot of people involved in it that shouldn't be there. I would like to encourage the buyers, though, do not treat the brokers as adversaries. Brokers have a difficult job. 99% of the calls we get are from people that are not interested in good faith transactions or aren't qualified to make them. I would just encourage all the buyers to understand that there are good brokers out there, and the more professionally you can appear in front of them, the more successful you're going to be. I've seen some people advocate for papering the town with LOIs all over the place and, circumventing brokers with their sellers and things like that. Again, I'm not defending every broker under the planet. I think that my industry could do, I think it could improve a lot in terms of just general professionalism. I'm just saying, if you're a buyer and you want to get your first one across the table, treat brokers professionally and don't be surprised that if you don't, that they're not going to call you back.
Yeah, absolutely. Well said. I tell people, I'm like you said, there's no licensing requirement to be a broker.
No,
And so
no.
it's literally anyone who raises their hand and says, I'm a
Yep.
broker. all the way up to like middle market investment bankers. There's a wide range there. And
Huge range.
and the more you get out there and start searching, you can start to, sniff out like who actually has their stuff together. Did they put time and effort into the sim? Are their ad backs reasonable? Do these things make sense? Are they, is this their full-time profession, or are they moonlighting when they're not selling real estate? Could be a red flag. So yeah.
Yeah,
Right,
and I think, like you said too, understand the kind of broker you're dealing with. If you are dealing with a broker that has a commercial real estate license, you're going to have to interact with them very differently than somebody who's been an M&A advisor for 20 years. That's part of the process. Is you're going to have to get good at sizing up, these professionals, because it's very likely that they're going to be the person that you have to go between to get to the seller to buy this business. Get really good at sizing them up and knowing what kind of person they are. And, you're going to have to sell them on yourself as a buyer as much, if not more, than the seller. So just be prepared for that.
Yeah, exactly right. So, all right. So if I'm an owner or a buyer in the state of Texas, and I'm interested in getting in touch with you, or if I'm just a searcher and looking to get some more questions asked, where can I find you?
Just go to venturatexas.com, or you can find me on LinkedIn.
Okay, venturatexas.com or LinkedIn.
Yep.
Excellent. Well, thanks for being here, John. I really appreciate all your insight. This has been fantastic.
Yeah, thanks for having me. I appreciate it. I love talking about this stuff.
All right, great.